Welcome back to the Kaiser Report. I'm Max Kaiser. We're nearly 5 years into the global financial crisis. Back in 2007 and 2008, when the crisis began, there were very few voices out there warning about and then explaining the collapse. 5 years into this crisis, let's go to one of them, the man who needs no introduction, Peter Schiff of SchiffRadio.com. Peter, welcome back to the Kaiser Report.
Thanks for having me on, Max.
All right, Peter Schiff, first of all, I want to get into a simple question. What is the exit strategy for these central banks that have taken on hundreds of billions of dollars of bad debt?
They have no exit strategy. That's been my point from the very beginning. When the Fed first started talking about an exit strategy back in 2009, I wrote a commentary and I said there was no exit strategy, that the Fed had checked into the Roach Motel of monetary policy, meaning they could get in, but there was no way to get out. Because the Fed is the big buyer in the bond market. They are printing all this money. They're buying bonds. They're buying mortgages. They have trillions now. Their balance sheet is going to grow now by $1 trillion a year. How can they possibly withdraw that liquidity? How can they sell all those bonds and all those mortgages? Who's going to buy them?
Right. Now, Peter, we're seeing the same thing all over the world. These central banks keep going down this suicidal path. Bank of Japan just announced, or they have a new leader. They're going to buy $250 in bad debt. They want to lower their currency. They want to lower their interest rates again. This has been going on for years now. You correctly called it. Brilliant book in Crash Proof. And this will end, it seems to me, there is a dead certainty, a 100% guarantee that the end result of this will be a currency collapse. Yes or no?
Well, the currencies will go down dramatically relative to gold, and some currencies will go down quite a bit relative to other fiat currencies. But at some point, central banks are going to face a choice between destroying the currency and destroying the phony economies that their cheap money policies have helped to inflate. But either way, it's going to be extremely painful. Of course, the worst possible outcome is if we destroy the currency, because then we'll have an economic crisis even worse than the one that we're going to get if we save the currency but sacrifice the bubble economies.
Okay, so you have this. We can see the end is I don't see how we're going to avoid a currency collapse. But the interim years between 2007, 2008, and that currency collapse, there's this debate going on. Is it inflation? Is it deflation? But these terms seem misplaced because they are only valid within the context of a central bank and economy that is functioning along the rules of law and logic. But you can't even use those terms, can you? Because this is...
Well, you can't look... You have to look at prices if you want to measure that in terms of real money. And what economies need is deflation. Deflation is a big part of the cure. You know, prices need to come down, particularly asset prices that are too high. Look, Americans can't afford to buy houses because they're just too expensive. Prices have to come down. The prices have to adjust, but the government won't let it happen. And so they create inflation to fight off the deflationary forces that naturally develop in the economy. But the problem for people who are looking at deflation, they go back and they look at periods of time where we had honest money, where we were on a gold standard, and they see what happened, and they don't understand the difference between real money that you can't create out of thin air and fiat currency that you can create at zero cost in infinite amounts. And when you have central banks and governments with this power, they are going to use it. And so they will continue to create inflation until ultimately the deflationary forces are overwhelmed and you potentially unleash hyperinflation and you destroy the currency. I mean, people forget. Look at countries that have gotten into trouble with printing press money. It always ends the same. They destroy their currency, and you don't see the currency gaining value and prices falling. But if you look at any of these hyperinflations and you measure prices in gold, there was deflation going on beneath the surface, but you couldn't see it if you were looking through the prism of a fiat currency. And the same thing is happening or will happen in the United States. If you're going to measure prices against the dollar prices are going to rise. They could rise dramatically. But if you measure them in terms of gold, they're going to fall.
Right. I mean, so to get back to your point there is a natural flow toward, you could call it deflation, as economies become more productive. Prices tend to go down. We see this in electronics industry, and the banks will offset this by printing money. But what we've seen something here, which is a breakdown in the, I guess you could call it the transmission mechanism, because the central banks are printing money, but it's not really circulating in the general economy. It's going right into asset price inflation. So you're seeing things, speculative bubbles. You're seeing a lot of bubbles right now. There's a bubble in London real estate. There's a bubble in the bond market. The bond market, the U.S. Treasury bond market and the U.K. gilt market, they're trading at 200 to 300-year highs. These are in bubbles, right?
Well, absolutely. In fact, part of the dynamic that is feeding this is the Federal Reserve prints money to buy U.S. Treasuries. And now the U.S. government takes that money and it spends it into circulation when it sends out Social Security checks, when it sends out unemployment checks, when it pays the soldiers. And now everybody takes this money and they go to Walmart and they buy imported products, or they go to the gas station, they buy imported, oil. And now the money flows out, and now China gets it, or Saudi Arabia gets it. And what do they do with it? Do their citizens take that money and spend it on American products? No. They take the money and they buy U.S. Treasuries with it. So even though we're printing all this money, it's not bidding up prices in America. It's bidding up bond prices, because the money we create gets sent to China or Saudi Arabia, where it's used to buy treasuries. That's where the inflation is showing up. You have inflated bond prices, but eventually that bubble has to burst, because nobody wants bonds for the sake of owning bonds. Bonds represent a claim on wealth, a claim on purchasing power, on consumption. And at some point, the people holding our bonds are going to want to cash them in and actually buy something with the money. And that's when all the inflation comes back to the America's shores like a tsunami coming in from Asia, and it's going to overwhelm us, because now all the paper money is going to come in and it's going to bid up the price of everything that's not nailed down.
Right. The bonds in America are trading at a 240-year high, and they're in this massive bubble. And when this bubble pops and the bonds crash, that's the same thing as a currency crash. How are you going to avoid that?
And people say, well, the bond market will never crash because the Fed could just print infinite amounts of money to buy up all the bonds to prevent the prices from crashing. But if they do that, then the dollar will crash and the bonds are worthless anyway. I mean, the
that's what I'm saying. So how do we avoid it? How do we avoid a currency collapse? This is what I'm saying. There is no avoiding. And, this statement was made last week that was completely felonious, that the government stopped buying Treasury bonds, that somehow interest rates would go lower. I mean, that's an irresponsible statement to make when the government is buying all of these treasuries, 90% of the bonds being issued in this massive asset bubble that's leading to a collapse.
But the problem is, my point is that the bond bubble collapses either way. Either the Fed stops buying or they destroy the dollar. But the only way to avoid a complete currency collapse would be for the Fed to do what it's been resisting all these years, and that is to stop buying treasuries, allow interest rates to skyrocket, which of course is what they're going to do, and then let the chips fall where they may. Let the banks fail, and don't bail them out. Don't even bail out the depositors when the banks fail, and force the government to restructure its debt, meaning the government cannot repay what it has borrowed. The government has to acknowledge that it's borrowed more money than the taxpayers can legitimately repay, and we need to restructure. We need to go through a structured bankruptcy where our creditors take a haircut. Bondholders, people who are planning on getting Social Security benefits, government pensions, Medicare, everybody's got to be leveled with, and everybody's got to take a haircut. Otherwise, the whole country is going to get a crew cut.
All right. So, Peter, your analysis is spot on, because it's just simple mathematics. You can't, stuff 20 pounds of into a 5-pound bag. That's what it boils down to. So, but your timing has not been perfect. But let's look at 2013, Peter. Is the paper apocalypse upon us, or are they going to fudge this for another, 12 months or so? What do you think?
Well, look, nobody's timing can be perfect, especially when you have giant governments all around the world, rigging this game, doing whatever they can to postpone the pain. And then you have cooperation by a lot of the private banks and investors, and a lot of them just don't even understand what's going on. And so they continue to buy, to buy this nonsense. And, the longer it goes on, people like me, and I'm not the only one who's been pointing this out, but as we point out the problems and then there's no Armageddon immediately, all of a sudden people start to say, you see, there's no reason to be worried. All the naysayers and doom and gloomers were wrong. Look, there's no inflation. And they just keep on, whistling past this graveyard. Can we get out of 2013 without a major crisis? I suppose we can. We might not. But the problem is the longer the bankers and the politicians succeed in delaying it, the worse it's going to be. Because the only way to delay the consequences is to exacerbate the underlying problem.
Right. So the point of timing is really a poison chalice, because the longer we wait for the inevitable, the worse it gets. Now, you mentioned governments, of course, and the governments have been caught rigging these bond markets. The Bank of England was caught working with Barclays and rigging LIBOR. So now the central banks are not only engaged in faulty ideological money buying and money printing, but they're engaged in outright fraud, as we now know with Bank of England, and of course they are in concert with other central banks. I wanted to ask you, though, a question, because you have often pointed to governments and saying governments are the culprit in all of this, and we've had this discussion going on, really going back years, where I have said, the banks certainly should share some of this blame. Now, recently we've had a situation with a bank here in the UK, HSBC, that was caught financing terrorism, laundering money for Mexican drug cartels, and they're involved in the LIBOR scandal with all the other banks. So isn't it about time, Peter Schiff, that we start to look specifically at these individual banks and say they're running a criminal enterprise, that they're very much a part of this problem, Peter?
Well, I think the problem, though, emanates from the government and the power and protection it can extend to these banks. It's like, once you set up this entity that is corrupt and that can peddle its influence to the highest bidder, once you start that game, then it's like, well, can I blame the bankers for playing that rigged game to their advantage? It's like, if you want to kill the snake, you got to cut off the head. And the head of the snake is the government and the Federal Reserve and their power to create money out of thin air, and the regulations and the taxes that they impose on the economy to benefit their friends and punish everybody else. So it starts at the top. And if we take away the power from government, then the bad banks will fail. And competition, will be allowed to work, and we'll have, free market capitalism. But yes, there is a lot of corruption in the banks, but you got to look at the source. It's emanating from Washington and from the central bank.
All right, Peter Schiff, we're out of time. Thanks very much for being on the Kaiser Report. All right, that's going to do it for this edition of the Kaiser Report with me.